Hey all, good morning and welcome to ShareTreck, our morning live stream. Yesterday I was a little ill prepared, but today I think back on the saddle. And thanks for your patience from yesterday. But I've been a bit incoherent, didn't sleep very well, but all good. So, what I'm thinking today is that the markets are looking steady ahead of the big economic data that might come up down the line, and most importantly, Jackson Hole and speech from Fed Chairman Powell. So U.S. stock futures are trading waters this morning. As you can see, S&P 500 is down 0.19%, whereas Nasdaq futures is down 0.12%. And the VIX is also a bit elevated today in the pre-market sessions. And persistent trade tariffs and tech sector worries continue to add uncertainty. But overall activity remains resilient as we enter the back half of the year. And in terms of major business news, I have some business news to share. I'm going to start showing you some of these as and when I'm able to. The first one is CVS. Now, CVS has been hit with a massive $290 million fine following a whistleblower lawsuit over Medicare overcharging. And this lawsuit was started a while ago, but now the verdict has been delivered, a $290 million fine. So that's one of the news that I'm seeing today. And the other one is Lowe's. Now, Lowe's is expanding. It's buying foundation building materials in a $8.8 billion deal, aiming to strengthen its reach in the contractor and builder market segment. And then I have another news that caught my attention, that is Estee Lauder. It's a makeup company. It cuts its annual profit forecast and warned about a $100 million tariff impact coming in fiscal 2026. The company's shares have dipped on this news. And from my perspective, the way I look at it from an economic point of view is that there's a concept called as elasticity of demand. And vanity products and luxury products are highly inelastic in the sense that regardless of prices going up, not much happens to them. So now it depends on what Estee Lauder is doing. Is it on the premium luxury segment or is it on the everyday retail segment? So if it's on the everyday common segment, then definitely it's going to face a loss. But if it was a very premium brand with a luxury appeal, then it would go well. But the management is saying that the tariff is going to have an impact around. I mean, we should take the management's point of view because they know what segment they're dealing in. They know that customers better. But I just wanted to talk about the concept of elasticity of demand, and it's going to become more important as we try to evaluate various companies and that ability to hold the price line and therefore preserve their margins. Next, I think the other aspect is that Guess clothing brand is going private in a $4.1 billion deal, including debt as founders and authentic brands team up for the buyout. Now, we have been seeing a lot of private equity taking over companies. Hudson Bay Company, I mean, it was more prominent for Canada because it's an iconic Canadian company which dates before the formation of the country. It was taken private, and private equity seems to be playing a big role in reducing the number of companies in the stock market as new companies get added. So anyway, apart from that, I think TJ Maxx and Marshalls have raised their profit forecast. This is counterintuitive, and they are signaling durable demand for value retail, despite lingering tariff concerns. This is why I was talking about elasticity of demand. So elasticity of demand is the way demand reacts, everything else being constant. If price is raised, the demand should fall. And if price is reduced, the demand should raise. The extent to which the demand responds to the price is called elasticity of demand. If the demand does not respond to increase in price, it is called inelastic. So the trend has been that necessities of life like salt would not change much even if the price is raised. Luxuries become even more sought after if the price goes up, whereas discretionary items have got a low elasticity of demand in the sense that they will respond immediately. They would, if you increase price, the demand would drop. So I'm hoping that TJ Maxx and Marshalls are right in what they are saying, because economic theory talks otherwise. Now, let us go to look at the overall. European zone is picking up with notable increase in new orders, as seen in their latest PMI data. And there's another news item that caught my eye. That was the auto loans. Now, auto loan delinquencies are at levels uh, that was last seen in 2009. That was 1.33, and right now it is 1.38. So they are at levels not seen since Great Recession. In Q1 2025, the overall 60-day delinquency rate has hit 1.38, which is above the 1.33 peak from 2009. And lenders loosened their standards during the pandemic, and many borrowers now face high interest rates and payments, averaging $750+ per month for new cars. And used car monthly payments are also elevated, hovering around $540. So that's what this news article talks about. And it's a matter of concern that we need to watch, because tariffs are going to hit the cost and demand for cars as well. And auto loans could only become worse, because many companies that give auto loans may go out of business because they can't find qualified candidates to lend the money. And the other aspect would be that people would not be able to afford the cars because they're too expensive due to tariff on steel, aluminum, and all that things. So that's what I'm thinking when I look at auto loans. It's a structural component of the economy. The stress in auto lending is expected to persist, especially as inflation eats into household budget. Even as headline inflation cools, core living costs for necessities remain quite high, regardless of all the things that we may talk about. And in terms of mortgage delinquencies, I was checking mortgage delinquencies because that's another area where you get an idea of how the consumer is doing. And it seems to me that mortgages are a bright spot. The mortgage delinquency rate has dropped slightly in Q2 2025, down to 3.93%, well below the historic average of 5.21%. Serious delinquencies, which are like delay in 90+ day or in foreclosure, ticked up a little bit, but early delinquencies are falling, and conventional loan performance remains pretty solid according to the data. And government-backed loans, like they saw raising delinquencies in recent years, but new foreclosure starts are at just around 0.17% of loans, a modest decrease from Q1. So in other words, I would say that overall mortgage defaults and foreclosures remain contained for now. In fact, they are looking pretty decent, contrasting with the pressures in auto and unsecured borrowing. And the composition shift with more serious mortgage delinquencies means we can't ignore this risk altogether, especially if the job market weakens or inflation flares up. All the layoffs that Microsoft, Google, and all are doing, it's also going to have an impact on mortgage delinquencies, because all of those people have been living in good houses and have good mortgages. So if they stop paying it, if they don't get a job, then we have to watch the mortgage. These are all structural components which are early indicators of problems that might come up later on. So that's what I have here for you guys. And now I want to go into the TradingView platform and start talking about what is happening with our indices and stocks and everything. So let's go on and first set this up to become a one-day chart. And let me go into the single window. And okay, so here we are. S&P 500 futures are down 0.23%. Now, it's very interesting right now what I'm seeing here. We have the potential of a mild reverse head and shoulder forming out here. And the neckline would probably be like this. Let me just pull this out. This could potentially be a neckline. So if we trigger this neckline, then we get the first sign of something negative or bearish happening. Right now, we don't have that. But I want to go into the 3-minute time frame to show you what it actually looks like. So if you see, this is the resistance that we are trying to break. It's a resistance at 6,408. That's going to perform the role of resistance for today. And let's go back to the 1-day time frame. And you'll see that we have a support at 6,373.75. This is in line with the expectation that markets are going to stay a little bit tame until we hear from Fed Chief Powell. So I'm looking at a lot of volatility on Friday. But today also, you can see that the VIX has gone up. We'll check that out when we go into the indicator section. But this is the range in which it will work. And the market sentiment is bearish. MACD is bearish. Momentum is dropping further. It dropped yesterday. It's dropping further, but yet it has not gone below average. Until it goes below average, I'll continue to have hopes of a bounce back, potentially from this line of support at 6,379.75. That said, let's go to NASDAQ. Same story out here. One more thing I wanted to talk about. Let's go to NASDAQ. Yeah, so NASDAQ has got this line of support out here. This is a new line of support that I have drawn here to show that it's going to offer support for today at around 23,168. And you see this candle out here. This candle is the opposite of the topping tail. And this candle shows that the market tried to sell off, but demand pushed it back again. There's a long wick and a solid body on top. So this typically shows a trend reversal. So I am expecting that if we manage to break through this resistance today of 23,299.75, we have a good chance of going up and potentially bouncing off 23,758.75. So that's a possibility out here. And in that case, if it comes back down again, we'll be forming a head and shoulder pattern, which will be a bearish pattern. So that is a potential bearish sign that I can see. Other than that, the chart is still looking pretty good, except for the bearish market sentiment and bearish MACD. And here, the momentum has already dropped below average. So given all of these, I think the saving grace out here is this particular candle, which is very bullish candle, and it has bounced off this diagonal line of support. And this diagonal line of support has been tested once, twice, 3 times, 4 times. And after 4 time checking this line, I think that we may have more opportunities to break down, and this line of support may not hold. It would have gotten weakened. That's my expectation. So we'll see what happens when the market opens today. But overall, I'm bearish. And the only thing that stops me from being full-blown bearish is because I don't know what Chairman Powell is going to say. He talks about a rate cut. There could be a spike in the market immediately, only for it to drop later. So when the spike happens, I'm planning to sell any of my long positions, which are very few. I have very few long positions, but let us see what happens. I'm keeping my fingers crossed. Now we have the formation of a head and shoulder out here. It's taking shape. Whether it will happen or not, I don't know. But dollar index is doing better. It's slowly creeping up, moving towards this resistance of 99.16. And then we have the 10-year yield, which is going up, 20-year yield, which is also going up, and 30-year yield, which is also going up. Now, let's go on and have a look at the indicators. And in the indicators, hi, Hot Dog. Thanks for joining. And in the indicators, we've got S&P 500. S&P 500 as a opposite of topping tail. I don't know what they call this. But in case of a topping tail, we know that when that symbol appears, the stock prices will go down. Here, this topping tail shows that there is a lot of demand and the stock price could potentially push up. And we have this line of resistance out here at 6,429.86 or 66. Now that is going to be the resistance for today, and we are going to bounce back up again. We'll open above this diagonal line of support, and the support for today is going to be 6402.10. So we need to open up, and then we'll see what happens. Overall sentiment is bearish. MACD is bearish. Momentum is also dropping quickly, and it's almost close to average. Now, NASDAQ, also has a topping tail reverse symbol, which means there is a lot of demand, and the support is holding up very strongly at 23,256.26. So we could bounce back from here and hit 23,599.02. And if we came back down from there, we have a we have a head and shoulders pattern happening. And that is a bearish sign. So let us see what happens when we go there. If we break out above that, then that could be absolutely bullish. Now, let's go to VIX, which seems to be elevated. Second time in a row, VIX is elevated, and we'll see what happens. We have to look at gold and see what's happening in gold. Gold is down 0.44%. But as long as it's in this bull flag situation, I'm happy about it. Let me just adjust this properly. So this is my bull flag. It's a little bit wonky there. Yeah, it's all done. Now QQQ is down 0.23%, indicating a negative open for the day. But even in QQQ, you can see that we had a bullish signal, this inverse hammer out here. This is a bullish signal, and I would expect that we would have a little bounce back today. But pre-market, we seem to be going on a downside, minus 0.24. So we'll see what happens. Overall, if you look at the other aspects of the chart out here, market sentiment is bearish, MACD is bearish, momentum is on average. So when the market opens, momentum would have fallen below average. All of that is negative for QQQ. And then we have put call ratio, which has become slightly bullish compared to yesterday. Yesterday, it was in the 90s, the 0.90, but today it's at 0.87, a slight improvement out here. Let's go on to have a look at AI. Now, NVDA is up 0.14%. That's not a big deal. But what makes me feel optimistic is that we have a very interesting symbol out here, which shows the sellers tried to push it down significantly. Buyers lapped it up immediately. And we are very close to the closing of yesterday. We are just on top of it. And that's why we see a gain of 0.15%. We'll have to see what happens when the market opens. I would assume a support of 173.88 and a resistance of 183.69 to be operational for today. We have the bearish divergence in place, and it's trying to manifest itself. So let's see whether the bearishness will persist or we'll go for a target, which we established earlier. Let me see why this is not moving. Is it because there is a lockout here? No, I'm unable to move this, but I can't see what's happening with this chart out here. So let's let it be. Basically, I would say that we had a target up there that is a bullish target, and we seem to be moving downwards. Now, next, let's look at Meta. Meta is down 0.52%. And again, Meta also shows the same bullish bounce out here. The support at 737.67 held very well. And it's going to perform the role of support again today. Google, again, has down 0.34%. Google also has a similar bullish symbol out here. And it's going to have some kind of a resistance out here at 202.70. Let me just mark this as a resistance. It's going to be red in color. And the support, I think, is going to be, I'm not ready to draw this line here, but 197.41 is going to be a support for Google. And let's look at Amazon, which is down 0.58% in pre-market trades. Again, you see the same kind of a symbol, and it has been stopped by this diagonal line of resistance, which was earlier a bull channel. Now it is becoming a resistance for the price. And we're going to have support today at around 219.44 and resistance at 227.63. Apple is down 0.28% and it's going to have a support at 222.72. Unlike the other Mag 7 components, Apple is not showing bullishness and it's showing absolute bearishness out there. However, market sentiment continues to be bullish. MACD is moving towards the signal line and it's ready to cross over to the bearish side. And momentum, which was pretty strong, has dropped very quickly. So we'll see what happens this morning when the market opens. Microsoft continues its move downward. This diagonal line of resistance seems to be guiding it downwards further. And at this point of time, I think our resistance is clear at 514.69 and our support I think our support is going to be somewhere in the region of 498.93. And this support is going to be a straight line that I would draw here. And this straight line is going to show you support at 498.18 for today. So that's the support. I still have my MSFD. Next, look at Tesla. It's down 0.18%. And we have the symbol of bullish a reaction when people tried to dump Tesla. The buyers came in and bought a lot. And that's why you see this long wick out here. It pierced this minor line of support and then jumped up again. And today, the minor line of support is going to be a resistance, is going to continue to be a support at 321.28. If we break down from there, then we are going all the way down to 298.44. It may not be a single stop all the way to 298.44, but we will approach it today, in my opinion. Then we have Oracle. Oracle is looking pretty decent, even though it's down 0.02%. It has done best among all the other stocks that we are looking at. And market sentiment is bearish, MACD is bearish, momentum is below average. So I think it will continue to move along this line of support, which is a very mild slope. And that's going to provide support today at 227.71. AMD is up 0.70%. AMD had a bullish reaction to the drop yesterday. And today, the minor line of resistance at 167.33 is going to be the resistance. Right now, we are at 166.35. If we break this, then we have another resistance. And this resistance is going to be somewhere around 169.70. However, the market sentiment for AMD is bearish, MACD is bearish, and momentum is below average. SMCI, I bought some SMCs yesterday, but SMCI is looking positive today. It's up 0.21. In fact, all semiconductors are up this morning almost in the pre-market session. We'll see what happens when the market opens. But right now, SMCI has resistance at 42.80, which was earlier a support. I'm not going to change the colors because I am thinking that SMCI may open above the support. But the question is, can it stay above? One thing that gives me hope is the bullish candle that we have out here. That shows a lot of buyers came in. If the buyers come back in again today, then I think we'll stay above the line of support at 42.79, or else we're going to travel towards our target of 33.37. And I'll plot more supports. Like, for example, this is a line of support out here. Let me put that out here and say we'll have a stop interim somewhere around 38.94. That said, Broadcom is down 0.22% in pre-market trade. Again, you will see here, sellers try to dump, buyers bought. That's why we have this wick. And our support today is going to be 291.12. Right now, we are 290.54. I'm not going to change the color out there. If we open above that, then we will have a resistance at around 303.04. Let me mark that red. That's going to be the resistance for today. Market sentiment is bearish, MACD bearish, momentum below average. Palantir, the most talked about stock, it has got high PE and high forward PE. The most valued company, highly valued. It has dropped a lot. If you take a widget from here, measuring widget, and take it down, it's dropped 17.35%. It's more than a correction. So our support, this diagonal line of support out here, has managed to help it. In fact, what I'm going to do is I'm going to change this support and make it even more fine-tuned. I think that what we could do is take it as close as possible to have multiple touch points. So this is the correct line of support. And we went down below this and we came back up again, and we are on this support today, and the support is going to be at 155.94 for today. And if the sellers come back and they push the stock up again, we'll stay above this diagonal line of support, and our resistance for today will be 173.77. SMH is down 0.19% in pre-market trade. Again, you see this bullish action out here. However, market sentiment, MACD, everything is negative. So that's what I have there. And I'm going to look at Rigetti. Rigetti has dropped below the price at which I sold it at a loss. So I sold it at 16.10. So I got around $2.6 that I can salvage by buying the same amount of Rigetti that I sold off, so that I have the same number of shares sitting with me and I have the cash back into my portfolio, the cash that I did not spend, but which I got when I sold it at 16.76. That is one way of thinking. And I would look at Rigetti falling further because it has fallen another 13 cents this morning. We have seen a little bit of purchase from buyers, which pushed it back up, saying, "Oh, not so fast, don't drop so fast." We still believe in Rigetti. However, you can see that we have a double top out here, and we have a gap fill to be done. So if we break down below this level, let me draw a line. So if we break down below this level, I think we will trigger the double top, and the double top will take it down all the way to this support of 9.90. That's what I'm expecting. This is not a done deal. It has to be triggered. I don't know if it will be triggered. I don't know if it will be triggered today either. So that's what I'm saying out there. Next, let's go and look at Genomics. And let me see what's happening out here in Genomics. We go to Prime. Prime is traveling along the bull flag, and it's up 0.31% today. I want to see it move up towards the diagonal line of resistance. But right now, there's nothing much to talk about. The overall chart is bearish except for the bull flag. Intelia is up 0.39%. Doesn't make much difference for Intelia. Market is bearish on it. MACD is bearish on it. And momentum is also below average, so not worth talking about. Caribou Biosciences is forming a reverse head and shoulder. Sorry, it's forming a head and shoulder, which is a bearish signal. But I don't think it has triggered the head and shoulders yet. So no moves downwards, but it's coming very close to it. Anyway, the market sentiment is bearish. MACD is bearish. Momentum is below average, not a great look. Beam Therapeutics is up 0.37% in pre-market trades. Nothing much to talk about here. Alt Immune is down 0.28% in pre-market trades. We have bull flag out here. I'm expecting for it to break out on the upside. MACD is bullish. Market sentiment is mending. It's coming to almost become bearish or neutral. And momentum is still below average. It needs to pick up. Editas is up 3.75%. It's moving along this bull channel. And for today, the support is going to be somewhere around $2.48, the support for today. Next, let's look at Illumina, which is up 0.20%. And we have got a resistance at 103.29. And our support is going to be in the region of $94.99, almost $95. CRISPR Therapeutics is down 0.23%. It's moving towards our target out here for the head and shoulders. And I think our target is going to be somewhere around 35.18. So that said, let's look at Allogene. Oh, wait a second. How is it 35.18? Let's see. Let me go here and let me push this upward. So there was a mistake out there. That's not the target. The target is that it will go down this much. So the target is 40.75. That's up to how low CRISPR can go, probably based on this bearish pattern. Apologies for that. Allogene is flat in pre-market trades. Nothing much to talk about there. Grail is down 0.06%, and it has got a support at 31.95. And right now in pre-market trades, it's at 32.15. So if the support holds at 31.95, we'll do well. But the fact that we have hit this line of support so many times means that right now, 90% chance that we're going to break down the support today. We'll check out what happens tomorrow, but I think Grail is going to drop below that and start going down. Once it breaks down below this, it's going to be significant. PSEV is up 1.97% in pre-market trades. Support continues to be at $1.21, and resistance is going to be at $1.43. So that's what I have for PSEV. ARCG is down 0.08%. Vertex is down 0.09%, still within the bull flag area. Not too much worried as at present. And then we look at DNA. I have got a little bit of DNA and it's flat in pre-market trades. I'm hoping for it to break the bull flag on the upside. And I'm counting on this diagonal line of support, providing us with support. And this diagonal line of support needs a bit of adjustments. So I'm going to do the adjustment out here right away to make sure that we have everything lined up properly. So this happens to be the line of support, and we've touched it and we moved up. And again, for today, the support is going to be 11.15. So that's what I have, my friends. And I'm going to look at PGen before I close. Precision is down 1.25. I'm going to hold on to it. I'm still profitable, and the holdings that I have are absolutely free because I've already taken the cost through the profits by selling half of the Precision. I had 1,000 out there, so that is good. And then we have Helix, nothing much to talk about here. And Lilly, Eli Lilly is moving up. It moved up yesterday. People tried to sell it and it just was resurgent. It pushed back up again. Again, today in pre-market, there's an effort to sell. In pre-markets, there are sometimes shortage of buyers, sometimes shortage of sellers. So it's very unreliable. So I'm expecting that when the market opens, Eli Lilly will move up. And the reasons are that in tough times, medicine still sells. Medicine is still needed. So medicine sector performs better. So we also have this regression channel where the center is pulling us. And I think there should be improvement in Eli Lilly. That said, RAD, which is Unilinks. I did another video today on Unilinks. They have a therapy called as DTX401, which is for GSD1A indication. And that has got all kinds of FDA credentials like orphan drug and priority review and things like that. So the rolling BLA was submitted. It makes the Ultragenyx stock even much more compelling. I made a video on that and released it this morning. Check it out. The technical analysis is coming separately in a different video. So friends, that kind of brings me back to the end of the video and today's session. Unless you have any questions for me, I think I'm going to hang up, go have my breakfast and get ready for the day. Okay, guys. Bye for now. Take care. See you.